Imagine you come across this amazing deal. The deal is so good that it could double your 401k. The problem is you need to move fast. The last video I showed talked about the solo 401k, which gives you that opportunity to move fast. However, now the problem is you don't have enough money in your 401k to make this happen. A lot of people just move on past this. They think they don't have an option. There's no way to make that happen. However, today in this video, I'm going to walk through what a non-recourse loan is. This is an amazing option for you. In plain English, a non-recourse loan just means that you won't be a personal guarantee. If I go to the bank today, even if I start up an LLC, more than likely I'm going to have to personally guarantee that loan. However, once that LLC gains credit, it won't need me anymore. This is similar but a lot different. In this case, your solo 401k is its own entity. You're about to buy a property, and the property will stand on its own with a loan against the solo 401k. If you were to default, they would just take the money you put down as a down payment, and then they would take the asset itself and sell it. When it comes to buying assets in your 401k with a non-recourse loan, you often have to put up bigger down payments. Most of the time, at least my experience is, you have to put down 40%. If you're looking to do this, of course you want to find the opportunity first, but I would already be shopping who the non-recourse lenders are, because not every bank does this. But step one is finding the opportunity. Step two is getting pre-approved. Step three is your 401k makes the down payment. Step four, the loan becomes secured with the down payment and the asset itself. And then step five, as you rent the asset out, all the income and expenses go through that account. Think about what that means. That means massive leverage. Now I can take an asset that maybe is $100,000. I can put $40,000 down, and I can control that $100,000 asset with just putting $40,000 down. This will make my 401k have explosive growth while giving me personal protection. And as I mentioned in the previous video, the solo 401k allows me to do this so that I'm not just fully invested into Wall Street. And there's one caveat I want to give you called UBIT, Unrelated Business Income Tax. If you go this route of using a non-recourse loan and you're borrowing money for your tax sheltered account, the IRS has some rules specifically around this. It's a very complex issue. Your CPA will know what to do, but in a nutshell, the IRS doesn't want you to have an unfair advantage of borrowing this money in a tax sheltered account. However, the benefits highly outweigh any of the cons. And if we're strictly talking real estate, most solo 401ks are exempt from this. But again, talk to your CPA. But I want to share with you how powerful this is. Let's say we have an asset that we bought for $100,000. We put $40,000 down, so we have $60,000 in loan. That loan and payment is going to remain constant, or maybe just slightly tick up a little bit if insurance and taxes go up, but the asset is going to appreciate. From our previous video, we appreciated at 3%, which was conservative. If we look at that logic, the $100,000 asset that we purchased at 3% appreciation every year, at the end of 20 years, which is maybe what we took that loan for, would now be $180,000. And at the end of that loan, we have no more principal. We only have interest and tax. So we own that place free and clear in our 401k. And at the end of that 20 years, our payments stop. We now just have to pay our taxes and our insurance, or we could potentially do another non-recourse loan. That's powerful and amazing, but look at it from another lens. Had we just taken that $40,000 down payment and bought a property for $40,000, $40,000 at 3% appreciation over 20 years is only $73,000. Comparing apples to apples, the $100,000 asset was worth $180,000, and the $40,000 assets were $73,000. So if we take the $180,000 from that $100,000 asset that appreciated, and we subtract the $73,000 from that $40,000 asset that appreciated, that leaves us $107,000 in appreciated difference over 20 years. That's from one transaction. But now the icing on the cake. We had a $60,000 loan, a 7% interest, 20 years is $465.18. But then let's say we have about $4,000 in insurance and property taxes, which if you divide that by 12, that's gets you $333.50 a month. The total payment's around $798 a month. Let's say we rent it for $1,000 a month, which you probably can get more. $800 in expenses, that's $200 a month. 200 times 12 times 20 is $48,000. Okay, let's have some kind of reserve. Let's put $1,400 a year in there times 20 years. That's still $28,000. Hopefully that makes sense to you. The solo 401k is an amazing vehicle, and I cannot stress it enough. Again, check out the previous video. It's amazing what you can do with a self-directed IRA if you're not able to qualify for a solo 401k. but you probably can qualify for a solo 401k. Talk to a professional and have them help you get started now. Whether you're door dashing, you're 1099, whatever you're doing, talk to a professional and get started today. Let's make money together. If you've been sitting on the sideline, now's the time to move. Let's get that 401k set up, that solo K, that self-directed IRA, whatever qualifies. Watch the previous video. If we're in debt, let's get out of debt. There's going to be amazing opportunities for us in 2026. What are you going to buy? Comment down below. Like and subscribe. Join the journey. I have a bunch more homes that I'm going to be showing in future videos as we close on a couple more, and we're getting ready to close on one more even. Like and subscribe, join the journey, and I'll see you in the next video.